This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your FOREX Report. Today is Wednesday, May 7th, 2008. Yesterday's afternoon recovery in the dollar continued into Asian and European trading last night, where the currency simply inched higher against most of its counterparts. The buck added to those gains during today's U.S. session, despite crude oil pushing to a new high above $123 a barrel. The worst part about oil's rally is that inventory numbers were much greater than expected. We would sure hate to see what prices do if inventories drop. Meanwhile, the dollar was underpinned by comments from Fed Governor Honig, who said that inflation pressures may force the FOMC to hike rates. Well, it sounds like a little bit of jawboning to boost the greenback. Traders are not going to take any chances with the currency near record lows. Furthermore, weak economic numbers from across Europe through the overnight session added fuel to this fire. The market's tone as we near the end of U.S. trading is inarguably one of dollar strength. The euro-dollar, our FOREX bellwether, fell some 150 points to test last Friday's low around 153.65. This is the low we saw on the back of a net loss of 20,000 jobs in the U.S. employment report, which means any good news from here or bad news from the Eurozone should be able to drive the pair down to the 152 handles. The pound dollar followed suit, dropping 200-plus points on weaker UK data. This took the pair from a chaotic range it formed in the last month or so and put it on a clear path lower. At least that's how it looks right now. Commodity currencies are still putting up a good fight for the most part. The Aussie is just off its highs around 95, while the CAD is holding strong near parity. The Kiwi has not been so fortunate, however, after the RBNZ stability report signaled deteriorating conditions last night. Both Australia and New Zealand report employment numbers tonight. Finally, the yen looks as though it may have some brighter days ahead as stocks look very vulnerable. The VIX volatility index is near last September's lows, indicating complacency is high. This puts stocks at great downside risk in a slowing economy and opens the door to selling and carry trades. Until tomorrow, have a great night. Take care.